How is it going, everybody? Big shout out to all of you guys that have joined for the indicator training class. This is Indicator 101. These are all indicators I use. Hold on, let me mute this. Wow. Sorry about that. I always do that. Okay, we are good. Apologize. Yeah, so this is 101, meaning we are not diving into in-depth indicators. These are all very basic level indicators that you should be using or at least look at, in my opinion, if you have basic price action trading down. All of this applies to price action trading. These are not typically indicators that a traditional price action trader uses, but the way I do my analysis is I start with price action trading and price action analysis, and then I go from there, cycle through various indicators along with some other more complex analysis methods, which for those of you guys that have been learning from me for a while, as we progress through these classes, you will eventually get to more complex training and you guys will have a better understanding of TA. TA is like a puzzle. You want to take all the puzzle pieces, piece by piece, and you want to put the puzzle together, right, to get a full image. Picture each puzzle piece as potentially an indicator, a form of analysis, price action, things like that. And then eventually you have a clear picture of the puzzle of what it is. And one day it'll just all click. Hopefully these indicators help with that. Each one of these is a piece to that puzzle. If you are not familiar with price action trading, or you're not as comfortable with it as you would like to, I will be doing a second part to price action trading. It looks like Thursday, so day after tomorrow. I taught a class a couple weeks ago. It was an introduction to it. That class will be $50 on Thursday, but you also get the first class of price action trading, and every person that attended that first class will also get this one for free. I do recommend you master price action trading and price action analysis before you get into more advanced analysis methods, including these indicators. However, we're going to go through these indicators and explain them. I will not be explaining most of the inputs on these, just more on how they react to price action, how to trade off of them, what to look for, what to spot, tips and tricks I use. I go against the grain with traditional technical analysis on a few things because crypto trades a lot different than traditional markets. And so hopefully this provides some insight on it. Shout out to everybody that signed up, though. I forgot to mention, I had over 100 people sign up for this class. Most of them are in various parts of the world that will be watching this after, but I was extremely shocked to see this many people sign up for it. I think $30 was a pretty good price point for everybody. I tried to make it cheap enough to where people could attend, but still reimburse myself for the time. That being said, I overshot what I was thinking I would get on signups, so I will be taking a portion of this and donating it to some charity. Not sure what yet and not sure how much, but would like to spread some donations to some of the charities that are looking for money during this holiday season. So I appreciate every single one of you guys for signing up. Really great. I'm going to need another manager for all these messages. That was ridiculous handling all of that, but it was great. Great to see a lot of interest in this, and I'm glad to have you guys here. That being said, let's dig into, let me give you a brief disclosure real quick on technical analysis. The trick with technical analysis is you take all the data you have in front of you, including these indicators that we're going to go over and other analysis methods, and you have to be very open-minded and fluid with your analysis. Not a single one of these indicators I covered today is your ultimate indicator. None of these indicators used by themselves will tell you where the price is going or where things are going. You want to take each piece of information and data for what it is, and you want to analyze it and come up and form your best decision based on all of the pieces. Again, picture it's like a puzzle, and you have all your puzzle pieces. As you go down your technical analysis path and begin to learn technical analysis, all these puzzle pieces will come together, and then one day you'll be able to just look at a chart and see the full picture. I promise you it does get that simple, but the path to that is hard, and it does require a lot of studying. Initially, I was going to do this through a Google Hangouts, so that way we could all interact. But then when I started getting the countless DMs, I decided Google Hangouts would be too much for this. It would be very clustered with everybody speaking at once. So I decided to do a private YouTube link here. Please do not share the link. I understand if you would like to show family and friends, that are close. That's fine. I get that. Go ahead and do that, to your close loved ones, but please don't share this publicly. There is, a lot of people that paid for this, and it looks like there's going to be a lot of people paying for the recording. Also, I still have about 10 DMs from the last 20 minutes of people trying to join last minute. They will have to view the recording. To everybody viewing this post recording, I appreciate it. If you guys have any questions about this, please feel free to message me. Um, for the ones viewing live, tag me in the chat. It'll highlight it yellow if you put at Nick Core. And then that way I can see the questions, and I'll get through every single one of your questions before this is done. But for those watching the recording, or even the live ones, if you have questions after, feel free to message me. Telegram and Discord is the best. I get way too many Twitter messages to be keeping track of them. So if you message me on Twitter or Discord, that would be best. In the future, I will be happy to answer them. Please be sure to put in the top of it that you took the indicator class, so that way I can see it and prioritize it, because I get a lot of questions about indicators, and I just frankly don't have time to answer them all. But if you took the class and you say that you took the class, I'll be sure to prioritize it and get to an answer on that. Again, thanks for everybody for joining. Let's jump into it. We're about 7 minutes in. That's the intro. Again, I just want to impress on you guys that not one of these indicators is going to tell you where the price is going. You need to learn to tie it all together, and any future analysis that you learn, analysis styles, to form a picture. That's the whole point of technical analysis. So you take each piece, analyze it, and you form your best decision. Remain fluid with it, because even with swing trading, definitely day trading, and all investing, the market changes, and sometimes even your analysis is wrong. Even if it is a right analysis at the time, sometimes the market wants to do its own thing, and there's other factors at play, such as black swan events and stuff like that. So you need to learn to remain fluid, but also disciplined to your analysis. Once you form your conclusion, believe in it. Don't let people sway you otherwise. One tip is, when you start to do your analysis, look at everybody's analysis online last, if you have to do that. I recommend you do your own first and form your own conclusion. And then if you have to look at, people on TradingView and in groups, things like that, that's fine. Just do it after, so that way you don't become biased. Definitely trust yourself on this. There's a lot of people out there that appear as professionals or appear as they know what they're doing, and they don't. It's very dangerous, especially on Twitter. Some of these analysts out there, and my whole thing with teaching people is I would prefer to teach people to form their own analysis instead of me just giving them signals, because it'll work out much better for you. Take it from me. I've been trading for a long time, and I highly recommend that you believe in your own analysis, but at the same time remain fluid for when conditions change. All right, so let's go to screen share. Originally, I had a PowerPoint that I was building on this, but for one, Microsoft, as great as they are, kept asking me for a product key. It is a registered product already. I tried putting it in. It was not working. Microsoft was glitching out. So whatever on that, that's fine, because I actually got some requests of people to be able to follow on TradingView as they watch this. And so some people have their TradingView pulled up so they can pull the indicators up. If you have a TradingView account, I do recommend you do the same and just kind of follow my screen as I label everything. Again, this is 101, so we're taking you through the basics of it, which is your base level for everything. But you're also going to get some pro tips that I've used over the years. A lot of you guys know I'm a big volume trader. We'll be covering that pretty well. And to be honest, the stuff I'm going to teach you guys is pretty easy. Don't feel scared going into this. It's very simple. It's not complex stuff. It's just a matter of understanding it and how it works, and being able to tie it all together into forming an analysis. So I think I've rambled enough for the beginning. Any questions real quick on any of that I said, go ahead and tag me on there. We will not be doing coin requests. That's not what this is for, guys. Let's try to keep the chat limited to questions on what we're talking about and not so much chatter. If you guys need to discuss what I'm talking, in the meantime, that's great. Josh is in here, Josh McGruff from Bitcoin Masons, a group in that him and 6 other founders and myself run. We have quite a number of contributors in there. They're all watching too, I believe, or will be watching. So there will be those guys to guide you in the chat. But let's try to keep the guide, or I'm sorry, the chat focused on what we're talking about, so that way the people that are here to learn can learn. So let's jump in and learn. All righty. I'll check the chat periodically, but generally I'm going to have this screen pulled up here. Real fast, for some of these indicators that we are covering, such as the CMF and the OBV, they have very basic level tutorials on their inputs and how they work on my TradingView. If you go to tradingview.com/u/Nick Core, or go to the top of my Twitter and click the link there to my TradingView, you can find these. They are, the CMF is here, the OBV is here, the Tom DeMark is here. There is a few other tutorials that are education based. Look for the ones that say education, like this one right here, or that one. This one is education also, although I never marked the education. But yeah, you can refer to these things. Also, this video will be available to you guys to review forever, as long as you guys don't share it and get all nuts like that and leak it. I am okay with you guys coming back to this video however often you would like and reviewing it. So, first thing we want to get into is our momentum indicators. Now, momentum indicators are lagging, as are most indicators. Let me adjust my microphone here. So you need to keep that in mind. Some of the momentum indicators we cover do adjust as the price adjusts, but most of them are based on the close. So as you form analysis, you want to keep in mind most indicators are not predictive. Actually, just about every single one, other than volume analysis. But even then, volume indicators are not predictive. Volume does precede price, so if you can spot divergences and you can spot, various signals on these volume indicators, then you can, in a way, predict which way the price. Generally, you need to keep in mind that as we go through the indicators, and especially the momentum indicators, that they are lagging and they're reacting to the price points of each price action. Momentum is the measurement of speed or velocity as the price changes. It's much more useful in trending markets versus ranging. So when we get into these ranging market, what I mean by that is when we have flat action like we see here on the BTC daily, where it's just flat and flat, our momentum indicators typically don't give us a lot of signals. What we want to see is movements such as this downward movement, which means trending. This is a bearish trend right here, or an upward trend, such as this little piece right here. So keep in mind, as you do your analysis, momentum indicators may sometimes be. Here we're going to go through is called the momentum indicator. It's a very simple indicator, very easy to understand. It is also known as the MOM indicator. As we see here, you can see up in this left-hand corner, it says MOM. That's just short for momentum. As I go through each one of these indicators, I'm just going to explain the basics of how to read them, what to look for, spotting divergences, and so on. But the momentum indicator is pretty self-explanatory. You have a median line here. This is really, when you first look at a chart and you're going through your basic price actions. So let's say we have our support here. We also have a support here. We are currently sitting above support here on the hourly with BTC, but we're also at resistance levels right there. So in this moment, we are currently ranging, if we drop down to the 15-minute, within this area here, which is not exactly, hold on. Screen is black, huh? Okay, sorry. I was not looking at the chat, and Josh just notified me that's very interesting. Let's try this again. Wow, you guys were messaging me for a second there. I apologize on that. Can you see the screen? No, you cannot. Wonderful. Let's see. Okay, before I get going here, present to everyone. Let me make sure it catches up on YouTube. We will recap what I was just talking about so that way you guys can see it. as soon as the screen share starts, but it is not. Very interesting. Stop screen sharing. Let's attempt this again. Of course, we're going to have some technical difficulties like this. Share entire screen. You know, it's strange. It's not even showing my camera here. Oh boy. What to do here? In settings, webcam is up. I don't understand why the screen share stopped there. Go to cameraman options, see what's going on here. Okay, I apologize now. Yeah, apparently this is a podcast. I can't even turn my camera off. That's the strange part of all this. Okay, yeah, I know this is black, guys. Give me a second. You know, it's weird when I click screen share. It says your screen sharing, present to everyone. It's presenting. Ooh, this is very frustrating. Yep, I have stopped and shared again many times, guys. I'm clicking everything. Not sure why this is not connecting. Can you guys still hear me? Okay, we can see me. Interesting. So let's see if this is working. It's strange in my Google Chrome area. It shows, I'll show you, it shows that I'm in here twice. Yeah, let me see if this shares my screen. Okay, it works. Yay. But if you look right there, you can see it says Nick and then my screen shares. So apparently I'm in here twice. As long as it's working, it's fine. It's a conspiracy, guys. It's the NSA. Okay, let's flip over. Hey, Josh, do a favor. Text me. I'm going to pull up my chart. I can't see. Actually, let me pull up my chart. Let me see if, and then I'm going to flip back over to YouTube to make sure that it presents it. Let's see. Catching up now as I watch. Okay, we're good to go. Apologize about that, guys. Okay, so let's clear this screen again and go back to it. We're going to start back over at trending and ranging markets. Josh, yes, do me a favor if this happens again. I can't pull up two screens currently, but yeah, text me if it is, even though it is delayed, and I will try to adjust it again because it currently shows I'm in Google Hangouts twice. So who knows what's going on there. So back to trending and ranging. As we can see here, this is a trending market. It is trending bearishly. It is also trending bullishly on this little impulse up, trending bearishly, trending bullishly. What I was saying with oscillators is, especially momentum oscillators, is they are best used in trending markets and not ranging markets. Back to the daily here, this is what I was talking about with ranging. This little area right here was completely garbage for most oscillators and indicators because we had no movement. You're not going to get a lot of signals on there. You're just generally going to get flat indicators. We don't want to see that. Crypto rarely does that, which is a good thing. We're still showing. Yes, we are showing. Okay, I'm going to check back to YouTube periodically to make sure that we're showing. That was the strangest thing ever. But yeah, we want to find a trending market typically with our momentum oscillators. The first oscillator we're going to start with is momentum one. It is very simple. If you go into your indicators there, type in MOM or momentum, it'll come up right there, momentum, and then you want to favorite it. And how you favorite it is you click that little star to the right, and then it will go over here and favorite it. You can see my favorited indicators right there. Those are generally the ones I use to do an analysis. I do cycle through other ones. But yeah, back to the momentum indicator. it's pretty simple. So we have our 0 mark here. Let me adjust this to 0 so that way you guys can see. I put it yellow there. We'll mark it pink so you guys can see it very clearly. But you have your median line with the momentum indicator. Now, as with all indicators on TradingView, you can go in here and you can change your settings around. I have mine set at yellow with a line. You could even do area with breaks like that, but that looks too similar to my CMF, so I keep it like that. Let me make this a little bit brighter. Check over to the chat. Yep, we are good to go. All right. So it's fairly simple. You have your 0 line, which is your neutral, your equilibrium of the markets. And the way the momentum indicator works, there is not a range like the stochastic or the RSI. It theoretically could go higher and higher forever. Now, it obviously wouldn't, but let's go to like the daily here real fast. We can see that the momentum indicator during our bull markets, let it catch up here, just continued to go high, but generally it came down to the equilibrium line on the corrections. Let's go back to the hourly here. Actually, that's a pretty good study there. So as we're in this bear market, we are down pretty low. And I'm going to label these as we go through it so that way you guys can see. I recommend you label it also, but it's at a negative 1,723 right there, which is pretty bearish. Now, keep in mind, it is lagging, right? So it reacts to the price. So as the price rises, it will rise also. But if it becomes flat, then it will generally stay flat in the range. However, if we take a look here at this daily, first tip we want to look at is the momentum indicator goes back 10 periods on the stock default setting. You can see the 10 right there. You can adjust it to 15. You can adjust to whatever you want. For this sake, we put it at 10. The higher you go, if you go to like 50, the smoother it will be and less signals it'll have because it's computing more candles. The less candles in it, the more volatile it'll be. But 10 is generally pretty good. But one thing I want to point out, we're going to be showing you guys how to find divergences because most of these oscillators are best used with divergences. So we want to take our little measuring tool, which is over here on the left, this little measure thing. You can click shift and then click on the chart, or you can just click it. And we're going to go back 10 bars, which is clear up here. So here's our point here. We can see that price has dropped drastically from this point, and we're going to go down to this current price action right here, down about 31% from that point right there. However, if we take a look at our momentum indicator, we have a clear bullish divergence. And what I mean by that, is that the momentum indicator is rising as the price drops. If we go back to, so here is the 10th candle here. The divergence really didn't begin to show till about right here, which was how many candles back? Let's see. All right, measurement tool. You're not working the way you're supposed to. The daily did just close, by the way, but about 6 candles back, we began to show a bullish divergence. Momentum was trending upwards. Price action was dropping down further, and that is what we call a bull div. You can spot that on multiple time frames with the momentum indicator, but this is a good base level indicator you want to learn to use as you cycle through your momentum oscillators. The next one we're going to go through, let me double check my notes to make sure. Actually, we're not going to do the RSI yet. We are going to go to the stochastic. Many of you guys know I refer to this as the Stoch. Reason being is Stoch is the shortened way to say stochastic. I don't want to say stock as it's pronounced because then people are thinking I'm talking about stocks. So I say Stoch, stochastic. Yes. So hold on one second, guys. I apologize. I need to respond to this text. Good grief. Okay. So what we see here, we do see, it's pretty confluent there. I was going to say the stochastic is showing a bull div also, but it's not there on the daily because the price has rose. If we flip this over to line, we can see that it's not divergent. But real quick, let's get into what is the stochastic, aka the Stoch. Let me delete this and go over to the hourly so we can see a little bit of price action there. So the stochastic oscillator is a momentum indicator, just like the momentum indicator we just went through. It compares the closing price of a security or asset or cryptocurrency to the range of its prices over a certain period of time. These are the stock default settings that I have on there, 1433. I really don't recommend you play around with most of these settings if you're just beginning. As you become more familiar with them, you can begin to adjust them and go from there. The sensitivity of an oscillator, my goodness gracious. Sorry, guys. The stochastic oscillator is a momentum indicator. We just covered that. The sensitivity of the oscillator to market movements is reduced by adjusting this time period or taking a moving average of the result. So the general theory serving as the foundation of the stochastic is that in a market trending upwards, price will close higher and near the high, and in a market trending downwards, it closes near the low. So generally what we want to see, let's put this back on candles for you guys, is as the price moves up, the stochastic moves up also. Now, what use would an indicator be if it moved directly in correlation with the price? It wouldn't be very useful at all. So let's see if we can find here a divergence. So let's flip over to, yes, so we have a divergence here. If we take a look here at this 4 hour, let's clear this off, and we are going to actually we'll leave this on here because the momentum indicator is used with not only the stochastic but the RSI. But if we take a look here at our price, generally we haven't moved much, right, from this low. Now we want to still keep this within 14 periods, as this measures about 14 periods back, so right around here. As we can see, price hasn't moved up very far, but the stochastic is quite further than when it started at the low. We're going to put that there. This would also be considered a bull divergence on the 4 hour. These are things you want to look for with momentum oscillators such as the RSI, which we'll get into next, the stochastic, and the momentum indicator. I like to use the momentum indicator as a way to confirm both the stochastic and the RSI, and we'll get into that in a moment because the momentum indicator is very simple, right? But there's more to it. You can confirm other indicators with that also. As a note, we did see lower lows on here, and the stochastic begin to make higher highs. So again, another divergence there in the bullish bias. But to cover the stochastic, we have a range that we want to look for. These would be considered, to put it simply, for those of you that are trying to learn the simple version of everything, these would be your overbought and your oversold conditions. Now, obviously, we can range within those below them, but generally when we hit these price points on here, again, this is stock, which is 20 and 80, we want to look for a price reversal. We want to keep an eye on it. If we go over to this daily, you can see we've been in oversold conditions for quite a while, several days here. Let's take a look at the weekly. It is just barely getting into these oversold conditions. So at this point, we want to watch for market reversal in price. As we begin to see bull divergences form on these lower time frames, then we want to look for them to form on the higher time frames. So you want to work your way up with these momentum oscillators. Start with your high time frames first, and then switch down to low. You want to do it in kind of reverse, the way I do at least. I start with the weekly, and I move down my time frames, and then I work my way back up, spotting all kind of bull divs, checking momentums on multiple time frames. And the more you do that, the easier it comes, and the quicker you can form an analysis. But back to the stochastic, you have your overbought and oversold conditions. Now, the stochastic does make its strongest moves especially in crypto, in oversold and overbought areas. There's this term that I've coined called the stochastic power move. Those of you guys that have received private tutoring from me have heard me talk about it. And we also get into these channels. Now, the stochastic has two pieces to it. You see this orange line and this blue line. We won't get into how those lines are formed because it doesn't really matter too much on the reading of it. If you'd like to research it, just really search stochastic and you can see how they form these. But picture them as a form of a moving average on a price close is the best way I can describe it. But your K line, which is your blue line on the stochastic, is your faster moving line, and your orange is your slower moving line. So what we want to look for typically, just like with moving averages, is a crossover. So as we see a crossover such as this one here, let's circle this for you guys. We generally want to look for a rapid price drop, and it can be an early predictor. If we look up here, we had a little bit of a sell-off. The stochastic crossed over. That could have been a signal based on that alone that we were going to drop further. As you can see, we did. We ended up dropping further. Now, there is some tricks to this. There is volume analysis that you want to look at when we get into these oversold and overbought conditions. Because if we go back to like the daily, let me clear these. And we go back to the bull market that we had the last couple years, way back here, you can see that the stochastic, which is right around here, remained in overbought areas for quite a while. But here's a perfect example of a stochastic power move. We get into these overbought conditions, the oscillators have time to relax, and as they relax, we get down into typically this range right here. You can really study past price action on the stochastic and see that here, we're going to mark this one pink so that way you guys can see that it does repeat itself. And if we're studying this, actually that blends into the background, so blue, you can see it bounced off of here a couple times in our bull market and also acted as resistance a few times. But as we came off of that price point, what happened? We ended up having another rally, even though it wasn't oversold conditions. Again, here's another example. So how would you determine whether we're going to make another power move or not? Here's a really good example of the power move here. Got way into oversold condition or overbought conditions. We came down, touched what seemed to be a prior trend, and then made a gigantic move upwards, thousands of dollars. We did it again. Again, this is at the peak of the bull market, so momentum was really high. So how do we confirm this? Well, we go back to the first oscillator I just showed you. We came down to this, and we can spot that there was a whole ton of momentum on the momentum indicator. So as the stochastic came down and it touched this kind of prior price history line, we took a look at the momentum indicator here, and we see that momentum is still very high and not really dropping. And so based just off of these two indicators alone, one could, what did I do here? One could reasonably, let me put this line back on here, 0. One could reasonably deduce that based on the momentum indicator and the prior action of the stochastic, we were going to make another move up, especially if we found stable support right around here, which we did. It was a new support zone, but it was looking decent. I'm assuming volume looked great. We'll dig into that in a moment. But based off of these two indicators alone, back in the bull market, you could see that we were going to actually cross $10,000. This wick right here, this candle right here, let's zoom way into that. We had wick clear up here the first time we crossed 10K at 11.45, came back down, closed below 10,000. This next candle on the next day gave us our relief that we wanted, but it was extremely divergent on the candle after that. The next candle was still bouncing off of support perfectly. We did have a little bit of a support break there, but again, these were new support levels. As we saw this little engulfing candle here, the stochastic bounce off of prior ranges that we were looking for on the stochastic power move and momentum high. One could reasonably decide that we were going to continue to go up on that. Now, let me stop sharing for just a moment and flip over to the questions and see if we have any. Does not look like it. Did all of that make sense so far, what I explained with the stochastic and the momentum indicator? Any questions on that, guys? Give it about 30 seconds, and then I'll continue. Move on to the next one, which is the RSI, Relative Strength Index. Adam asked, how does your analysis change when looking at these indicators when we reach psychological price points like 10K? It doesn't change much as far as these indicators that we're specifically talking about, because, again, tag me on this stuff, guys, so that way I can go through them. Because, as I mentioned there, you know, we had crossed over, came back, but the momentum was still really high. That stochastic touched a prior price point. Volume was extremely high. We didn't look at that, but it doesn't change much because it just shows that we are going to continue to rally. Benzin asked, can you briefly touch on how to expand your indicator so quickly? Yep, you just double click it. So you put your mouse over the indicator, double click, and it automatically moves it up. Shami asked, what's the best time frame for these indicators? Any of them. But that being said, with momentum indicators, the higher the time frame, the more reliability it has. The lower the time frame, the more false signals you will get. Brian asked, if momentum is up, is that still a down indicator in a bear market? Not sure what you mean. If it is trending down and momentum is going upwards, then that is called a bullish divergence, and that is something we want to look at as a buy indication. Hari asked, what is the difference between Stoch versus Stoch RSI? So the Stoch RSI, honestly, guys, is garbage in crypto. There's too many false signals. It's great for Forex, which is slightly more stable, but I highly recommend you stay away from the Stochastic RSI. It is slightly combination. It is not just the RSI and the Stochastic combined. It does have different inputs. I do not using it. But yeah, Benzen asked, I see you flipping through these views so fast. Yeah, you just double click it, Benzen, and it will open it, expand it, and close it down based on your double click. Rutwick asked, does Stoch power move indicates continuation of a trend? Yeah, typically, but there's usually a short-lived trend. If you study Elliott waves, you typically see them on like your fifth wave. So after we have a big move with the third wave, which is typically your longest and most powerful wave, I typically see that fifth wave match the stochastic power move. By the way, that's nothing you guys find in books. That is just my observation of the stochastic. I do like to put little trends on there, as I mentioned before. The stochastic is a great indicator once you master it. Gypsy asked, maybe show a quick example for a bear div. Sure thing. We'll do that real fast. And Mr. X, can you see in the momentum indicator if the price was overbought or oversold? Nope. As I mentioned before, okay, that's enough questions on that, guys. I think I covered them, but let me answer those last two. As I mentioned on that, the momentum indicator does not have overbought and oversold levels like the RSI and the stochastic. Theoretically, it could continue to go forever based on the trend. It does not have overbought and oversold levels, just an equilibrium of the market, which is 0. Let me double check. What was that question? Oh, yeah, bear div. Let me show a bear div on that. I'm sure we could find some on the 4 hours. Let me expand this momentum indicator. I messed it up. But yeah, so let me find a pretty clear bear div since we showed you guys a couple bear divs, and we'll go over that real fast. So yeah, here's a pretty good example on the 4 hour. We've been ranging in here forever. The market should have generally remained flat. I guess it's not the best example, but good enough. The momentum indicator started to drop pretty rapidly, and you can see the price started to move up right there. But momentum indicator was still down pretty far, and then we ended up falling down pretty quick. Not the best example, but let's find another bear div on that. It should remain fairly confluent. Where you see the most divs is, let's say we're in a bull market. That's where you're able to spot the best bear divs. If we're in a bear market, that's where you're able to spot the most bull divs, because generally the momentum indicator and stochastic will be trending with the market. So let's look again. We did get a very nice bull div on here that ended up not playing out. Not sure who's messaging me. They're going to have to wait. So looking for a pretty good bear div example. Let's go over here to the bull market because, again, it'll be easier to spot those divs in a bull market, especially when the price reached its peak. I'm assuming we can see a pretty good one here. Yep, we do. Okay, so here's a great example of a bear div. Again, you'll spot more bull divs in a bear market, and you'll spot more bear divs in a bull market. But the price was, let's get rid of that. The price was trending upwards here. This top that we had in Bitcoin was so visible, it's not even funny. I'll show you how I spotted it through volume analysis when we get to that. We are flying through this time here, though, so I'm going to try to move as quick as possible, guys, so that way I don't keep you. I'll be here as long as it takes to explain all this stuff, guys, but you can see the price made a higher high, but if we take a look at the momentum indicator from that range, the momentum indicator was trending downwards. Just based off of that one indicator alone, you could have been able to spot the top on Bitcoin. So maybe you just got your money's worth off of that one right there. Next time we're in a top, take a look at the momentum indicator. Maybe that'll tell you when the top is coming in before the rest of the market knows. Let me flip over to these questions real fast. Wow, here we go. Okay, we covered that. Benzan, how many or which time frames do you look at until you begin to feel that trends are playing out impossible? I look at everything from the weekly down. As I explained, I start on the weekly, I go down to the 3-day and the daily when I do my personal analysis, flip all the way down to the 15-minute because I'm a day trader, and move my way back up. Yuri asked, what is the best time frame to find patterns in? The best, most ideal time frames are your higher ones, your daily, your 3-day, your weekly, your 12-hour. Those are the best way to find your divergences. Josh, when beginning with divs, I recommend Googling divergence cheat sheet to keep handy for comparisons. Yes, if you do not have that cheat sheet or cannot find it on Google, message me or Josh and we will send it to you. It is a great way, but generally what you want to look for is, like, for instance, a bear div would be price would be going up, but the oscillators are trending downwards. There's 4 different kinds of divergences. A bull div would be price is trending down, but the oscillators are trending up. But yes, definitely learn your trends. Good point, or I'm sorry, your divergences. Good point, Josh. Thank you. Pedro says, since those indicators work better in trending, are they bad to spot reversals? You have to kind of think about your question there, Pedro, because if the market is just ranging, it's not exactly going to reverse, right? It's going to break a certain way to trend. So in order to have a reversal, you need to have a trending market. So yeah, the question is slightly flawed because in order for a reversal to happen, you have to have trends to begin with. Ranging is, you're waiting for a break at that point. You're not exactly reversing a trend because there is none. Let's go back to screen share and let's head over to the RSI. So for those of you that don't know what the RSI is, it is the relative strength index. Let's take that off of there. Let's throw on the RSI and bam, look at that. First thing I see. We're gonna turn this line way up so you guys can see it really well. Can you guys see that RSI being pink? Okay. Somebody just type if they can see it. Yep, I can see it on the YouTube screen, so we're good. No need for an answer. First thing I spot is, again, we were divergent there. So just off of these 2 indicators alone, you would have been able to spot the top on crypto, not to mention volume analysis, which I've done. We had very clear bearish divergences. Price action was getting higher, but the RSI momentum indicators were trending downwards. That is very scary, and that typically means a reversal is coming. So for those of you guys that did buy the top of the bull markets, you're welcome. You've just been taught how to never do that again. Teasing, but yeah, learn these tools so that way it never happens again. These 2 tools alone showed you the top of the last bull market. Pretty amazing, in my opinion. There was a number of ways to do it. Volume analysis was that too. So let's dig into the RSI a little bit. The RSI is also an overbought and oversold indicator. You have your oversold area down here, and you have your overbought area down here. I keep mine on stock, which is 14 periods back. You can adjust it to however you want, but I recommend keeping it at 14 because it does work pretty well for crypto that way. Here is where the momentum indicator really comes into use. When we see bottomed out RSIs such as here, which by the way is showing a bullish divergence on our current price action, I am expecting a pop-up based on these divs. Eventually, these divs are going to play. Not to say that we can't trend lower, but based on these indicators on the daily, we are looking bullish off of that. That is a bull div that eventually has to play. It can correct itself if we sell off enough, but generally, strike rate on these is pretty low, and we play. But again, we have a price trending down, RSI trending up, momentum trending up, and we are showing a divergence. Now, where does the momentum indicator come into play? Again, it doesn't have a range. It just has your readings on it, so you can kind of understand where it's at. We're going to drop down to the hourly here. Let's clear off all these tools real fast, and let's dig into how you use the momentum indicators to confirm these overbought and oversold conditions. Again, I see nobody in technical analysis teaching these kinds of things, especially with the momentum indicator. So you guys, in my opinion, are viewing things that will give you an edge on the market because not a lot of people use these indicators this way. I do. So as we're here on the hourly, we can see the stochastic is overbought. The RSI is not quite overbought. So let's take a look at the momentum indicator and see if the stochastic is going to make another power move or if this is looking about right for a reversal. Put that 0 median line back on there. Matter of fact, I should be able to just turn on the median line. Let's see if they have. Nope. No, they don't have a way to mark the median line. So momentum is up, but the stochastic is in overbought territory. What do? We take a look at the RSI, which still has some room to move upwards. Hourly hasn't been too great, though. If we take a look at the hourly, we generally have been topping out there. We haven't really been getting into overbought conditions, except for clear back here but price structure of the market was completely different. So what we want to look at is, let's see if we can find the RSI in overbought conditions. So that way we can show you a good example here of a reversal using the momentum indicator. Okay, here we go. So let's zoom into this. So the RSI, in a sense, found two tops here. So let's replay this actually. Let's go back to there. So, whoops. So the RSI reached these overbought areas, so did the Stoch. I typically look for a power move here. However, let's take a look at the momentum indicator to confirm not only the stochastic, but also the RSI. We are beginning, let me dotted line this so you guys can see it. We are beginning to trend downwards back here with the momentum indicator, meaning momentum is losing, but price is beginning to skyrocket. So by this theory, I would say that the RSI needs a reversal since it's an overbought territory, or overbought, and the stochastic is approaching it again, and we don't quite get the power move. To be honest, I think the power move was there. So really, we did get the power move. The price made a higher high. Power move was there. That's great. But is it going to make another power move? Probably not, based on the momentum here. And so the momentum indicator is trending downwards. We have it on play here, and we can see what happens there. Momentum indicator confirmed both the RSI and stochastic and brought us back down, and price action begins to slowly decline and drop further and further. So hopefully that makes sense on how you guys use the momentum indicator. I think it makes sense to confirm the stochastic and the RSI. Also use the momentum indicator to identify ranging, trending markets, your oversold and overbought conditions, things like that. Let me flip it off a screen share and check this chat to see if there's any questions on how you use the momentum indicator to confirm the stochastic and the RSI. Hayden asked, how did you drop the median line? I just went into my inputs there and typed in 0 manually. I just went into the settings on the indicator. Ezra G, area with breaks shows the 0 line. Yeah, it does, but it looks very similar to my CMF, so I just kind of keep it on line there. But yes, you can go to area with breaks in your settings. Let me show you guys how to do that real fast for those of you guys that are curious about it. So you do this. You go over here where it says style. You can adjust the thickness of the line, the color of it, and then also you click area with breaks, and it will do this. It'll give you this little range. You can see the median line right there, but it does look very similar to the CMF. So I generally keep it on line, on just typical line settings there, because I use the CMF quite a bit. Let's flip back over to this chat and do that. Brian asked, what if it looks like a lot different on different charts, 4 hour, 1 hour? So you mean different time frames? So typically your larger time frame divergences are going to override your small time divergences, your smaller time frame divergences. However, the smaller time frame divergences, if there's conflicting divergences, will move the price action in very small ranges. And you need to keep an eye on it, because if we get a large enough divergence on a smaller time frame, it can pull a larger time frame divergence out. Hari asked, using these indicators, when do you typically enter the trade? So that's something we won't get into today, because we were just doing indicator trading 101. But that's basic price action trading that you need to learn to add to these. So you need to learn to find basic support levels, basic resistance levels, and confirmation levels, and then use these indicators to confirm that, and also to find when you exit out of trades. Any other questions on the momentum indicator, stochastic, or RSI? I think the next one we will do is, let me check my notes here. Covered all that. Yep, I think we'll do the MACD next, which is known as the moving average convergence divergence. I'll see if you guys have any questions on any of that that we just covered real fast. Give you guys a couple seconds since it is delayed, and then move on to that. I hope I'm not moving too fast, guys. I'm trying to explain this as simple as possible. Let me know if I'm explaining something too complex, and I'll try to break it down a little bit simpler for you guys. All right, let's switch over to the MACD. All right, let's take off these indicators and look at the MACD, the powerful MACD. There we are. So the MACD, as I mentioned, that is short for the moving average convergence divergence. That is a mouthful. Just call it the MACD. But basically, it's a trend following momentum indicator, similar to the stochastic and RSI. And it shows the relationship between two moving averages of a security, assets, or crypto's price. The MACD is calculated by subtracting the 26-period exponential moving average from the 12-period EMA. The result of the calculation is the MACD line. A 9-day EMA of the MACD, called the signal line, is then plotted on top of the MACD line, which can function as a trigger for buy and sell signals. So we are going to label this for you guys, because the MACD is kind of complex here. Whoops, not MACD loan. So MACD line is the fastest moving piece of the MACD. That's the line that we want to watch the most for crossovers on our slower moving length. We can adjust these, but generally you want to keep the MACD the same. You can add an oscillator on there, MACD signal line, but generally I keep it stock. So let's go over the components of it, and then we'll get into how to trade with it and spot it. But some traders wait for a confirmed cross above the signal line, which we'll get into in a moment. But crossovers are more reliable when they confirm to the prevailing trend. Actually, I'm skipping ahead here. So the MACD is often displayed with a histogram, as we can see here. This right here is called a histogram. These green and red bars. And what the histogram does is it graphs the distance between the MACD line and its signal line. I forgot to label the signal line here, which is the orange one. We're gonna color this the right color so you guys can see which one. Big and bold. Oops, already was bold. And then we're gonna color this one blue so it matches. So that way you guys know what the hell I'm talking about. And our histogram. Okay. Let's adjust this so you guys can see this clearly. So you have the MACD line. We won't get into too much of the functions of it and how it happens, or excuse me, not the functions, but how this moves. But generally, you want to look for the MACD line, which is your blue line, crossing over your signal line. Now, what the histogram does is it plots the difference between the MACD and the signal line. If the MACD is above the signal line, the histogram will be above the MACD's baseline. If the MACD is below its signal line, the histogram will be below the MACD's baseline. Makes sense? Simple enough. Traders use the MACD histogram to identify when bullish or bearish momentum is high. And so what I mean by that is as this gap as this gap gets further and further away from each other, whoops, clicking the wrong one here. So as the signal line gets further away from the MACD line, these little histogram lines spike up higher. It's a way to measure strength of the trend. So as you can see here, we were extremely bearish because the MACD line got further and further away from our signal line. So you can kind of eyeball it without the histogram. You honestly don't need the histogram, but the histogram allows you to kind of gauge the strength. A lot of people think this is volume. It's not. It is simply the gap in between the signal line and the MACD line, and it plots it there for you to see a little bit easier. Now, how do we trade this? Well, we want to look for these crossovers. We want to see crossovers such as that. We're on the 15-minute here, so the reliability of it is not that great, but we did get a pretty good little signal right here. You can see the crossover happened in real time. That would have been right here, and then we had another few candles of bearishness. As the MACD started to flatten out, what we look for is this histogram begin to turn a neutral color, and it begins to recede, meaning price is beginning to find a bottom here. Let's go to another higher time frame to spot this. Let's find something slightly better. Clear all these. Okay, so yeah, let's see what the daily shows us. Nope, not really anything. Actually, no, I take that back. This is a very good study. Again, this is divergent, or at least confluent with price action. So MACD here got really, really bearish. The gap between the MACD line and the signal line got further and further away as we dropped, as it should. But now we can see the MACD is beginning to recede here. What does that mean? Well, that means it's slightly getting bullish. And as we can see, it's receding. It's getting closer and closer to the center line. So this MACD line is getting closer and closer to the signal line, signaling a potential crossover that would be giving us a bullish signal. Right here, we got a false signal. So again, you want to be very careful with all of these indicators and use them all together to form your analysis. But let me find a perfect example of an early crossover. Yeah, right here. So this candle right here, clear down here, the histogram. So if we rewind, let's rewind again to there. The histogram began to show a little bit of bearish signal, meaning that this MAC or bullish signal, this MACD line was getting closer and closer to this signal line. And as we let this play, we can see it's still subsiding, getting close. Whoops. Let's pause, take it back. I fast forwarded it too far. Play again. We're going to pause it right when it crosses over. Boom. So it crossed over, right? Not only did we have a really bullish signal on the histogram here, but it crossed over, meaning we are looking bullish there. Obviously, the price reflecting it. It is a lagging indicator, but most of the time you should be able to find it early. What happens if we were to enter a trade into there? The MACD signaled us pretty good, and we continued bullish for a little while. But then we started to lose momentum. So on this bar here, let's back up. We would have, if we were watching this in real time, the moment that started to subside right there, we would have looked to exit out of our long because it was beginning to look bearish. Obviously, we would confirm this with other indicators too, but the MACD is very useful. Just use it with other indicators. Let's see what the RSI and the stochastic showed us at the same time. And the momentum. Let's throw all four momentum indicators that we've covered there. So the RSI wasn't really showing any divergences there. Momentum had made its way back down, but generally this was a great trade based off of the MACD. Our RSI would have not given us much confirmation on that. However, it was beginning to show weakness that would have confirmed on the MACD that we needed to exit out of the trade. Same with the momentum indicator. So that generally covers the MACD. Let me make sure on my notes that I've covered all of that I wanted to cover. Yeah, that should generally cover it on the MACD and the RSI, and the momentum indicator and stochastic. I think next we are going to cover, let's take a look at probably, we'll break it up here and let's do Bollinger Bands. And from there, we'll go to shock and money flow and on balance volume. Actually, no. We're going to go Bollinger Bands, GMMA, which is known as the Guppy multiple moving average. And then we'll cover volume last. Rutwick asked, what if stochastic and RSI shows different things? For example, Stoch is an overbought and the RSI is an oversold. You generally don't see that. They typically move together. If that happens, then I would assume your settings are off on one of them. But generally, they should move pretty close to each other. They will be in different ranges. For instance, the RSI might be in the middle, but your stochastic is showing your overbought conditions. So I would look at that as a definite reversal. The RSI did not have the power to get up, and remember the RSI is a relative strength index, and the stochastic is more for measuring, I guess, overbought and oversold conditions, even though they both do the same. They're both momentum oscillators, but if they were completely opposite, I would assume your inputs and your settings are off, and you probably want to reset it to default. Probably not a good sign there. But generally, they'll move the same. The RSI can be looked at as strength. Any other questions on that before I get to Bollinger Bands and Guppy multiple moving average? Brian, do you use the preset settings in TradingView for most indicators? Some of them I do. The ones that I don't, I'm covering, but the stochastic and the RSI and momentum indicator I do. I might change the colors around on them, but the inputs I remain the same. Okay, so this is what we're going to do. I am going to run and use the restroom real fast, and I will be back, and then we'll cover the Guppy multiple moving average and Bollinger Bands. Give me 1 second, guys. Yeah, so 2 minutes. All right, guys, we are back. So let me ask you, I showed you how to spot tops and bottoms. You would have been able, had you had these tools back in the last bull market, not been able to buy the top and spot the top. So far, do you think it's worth the $30 you guys paid to come in? If you don't, be completely honest. We're not even done yet, but I'm just curious, just with the tools you've seen, if it's been worth it so far. Be completely honest if not. But okay, Brian says yes. Thank you very much, Brian. We're just getting started. Awesome. Yeah. Yeah, definitely. I mean, just those off of those indicators alone, you would have been able not to bot the top and spot the reversal and sold it and not been stressed. Game Soup, do you ever use the RSI crossing back into the 37 area as a buy sell signal? I do, but I confirm it with other technical analysis also. I don't rely on just one indicator, guys. You got to learn to tie all these together to make that puzzle piece I was talking about, that puzzle picture. All right, let's get into the Guppy multiple moving average and the Bollinger Bands. They're actually really simple, very, very simple. So let's close off the indicators, make this chart simple. I get accused all the time of having too many indicators on my charts, but as you guys can see, they all work together cohesively. There's a reason I put them on there. I try to simplify my charts as best as possible when I publish analysis, but as you can see, I have them on there for a reason, and they all work together, and they all kind of sync up together if you learn how to use them and what to spot. Bollinger Bands. Let's get to those. So Bollinger Bands, we're going to keep it pretty simple here. Uh-oh. Those of you that have used the Bollinger Bands knows what this means. Okay, so the Bollinger Bands was created by John Bollinger, legendary stock trader way back in the day. Basically, what the Bollinger Bands offers is a range based on the closes of price action. And as you can see here, it trades within the range generally. When you get outside of the range of it, then typically something is wrong. Same with on a rally. What we want to look for is, we'll get to that daily in a moment. Here we go. Here's a good example. So this is, look at it as a trading range. The Bollinger Bands have your tops and your bottoms. You can see we wicked off that Bollinger Band just perfectly. Sometimes I wouldn't call it support, but look at it as trading ranges. You have this red line right here. Let me make this really bright for you, which is called our basis line. And what the basis line is, we're gonna make this entire thing bright so you guys can see it well, because I know it doesn't always stream through YouTube the best. So you want to use this as a guide and not an absolute. You don't want to say, oh, you know, if we're in oversold conditions on the stochastic RSI, volume's looking like crap, we're going to drop to the bottom of the RSI, or I mean the Bollinger Bands. Not necessarily. Sometimes, yes, but generally look at this as a range. What I like to use it for is when we see these B-band squeezes. Whenever we see a B-band squeeze, such as this nasty little squeeze right here, to where it's really, really tight, that means a major move is coming. Up or down, you don't know without doing further technical analysis. The Bollinger Bands generally are best used for spotting major moves up and down. You can see we ranged here forever. But every time we get these really tight squeezes going on, boom, drop out. So you can see how big these ranges are, but they're in reaction to these gigantic drops. So generally, you want to look at a median line. If it's found its equilibrium line, then great. But as we begin to squeeze here, where were we at? Where we saw a nice little squeeze, 6 hour, 4 hour, where was that? 15-minute? Nope. Here's a good example. So we're at the top of the Bollinger Band on the 15-minute above the median line. Can be viewed as strong, but it can also be viewed as we potentially could be coming back down to either the median line or the bottom. How do we decide that? Well, we look at our momentum oscillators, which you guys just learned, the MACD, the stochastic, the RSI, and the momentum indicator, how to confirm using all of those. And then we would also look at volume, which we will cover next. But Bollinger Bands, pretty simple. What we want to look for is these squeezes. We could tell that a major move was coming here. There wasn't a lot of indication it was dropping based on your momentum oscillators because we were ranging, so that kind of sucked. If you took a look at volume, though, you would be able to tell that it was dropping down, which we'll get into in a moment. But you can see such a huge trading range now. Again, another reason to call this oversold, but then again, it's been oversold for quite a while. But yeah, the biggest moves we want to look for. Let's go back to the top of this. Let's go back to this bowl here. Okay, so we had a nice little squeeze here on the daily, and that's about as tight as it gets. As it squoze, we want to take a look at our oscillators, our volume. Generally, we probably would have seen here that it was looking very bullish and that a move was imminent. So best pro tip for using Bollinger Bands, when we get these really tight squeezes on here, it's about to break. Something is going to happen soon, and you better be paying attention to the market. Let's take a look at our stochastic, RSI, and momentum. Generally, everything was pretty slammed here, but where we did get the signal off of these Bollinger Bands was the momentum indicator was dropping rapidly below the median line. That should have told us right then and there that this break, when it did break out of the Bollinger Bands, was going to be a drop. So yeah, that's the basics of the Bollinger Band. Look at it as a trading range. As we get these tight squeezes, we want to look for a general break on it. Again, there was a squeeze and it broke up. Let's take a look at our oscillator, see what it was telling us. We actually got the stochastic power move here. Momentum was trending upwards on that. I'm assuming volume, which we'll get into in a moment, was pretty bullish. And based on that squeeze here, we would have taken a long position. Stochastic power move, momentum going up, and volume, which we'll get into next. So squeezes is the name of the game with Bollinger Bands, and trading ranges. Pretty simple, guys. Next up, GM. Well, let me check questions. Sorry, guys. Adam asked, let me turn off screen share. Adam asked, I assume you're using Bitstamp since it's high volume. Do you ever work your way through other exchanges, like you work your way through different time frames? I answer this question every single day. To be honest, I use Bitstamp because it has the least amount of manipulation on volume due to no leverage trading. Also, it has very long price history and very stable price history. I get the least amount of false signals on my indicators on it. Bitstamp is my go-to exchange, whether I trade on Bitstamp or not, but it is my go-to exchange for charting. Yes, I do look at Bitfinex, and I do look at Coinbase and occasionally BitMEX, but there is a lot of manipulation going on in those exchanges. But if I don't quite have a clear picture of the market, I'll switch over and do also Bitfinex and Coinbase also as my tiebreaker between the two. Pedro, so you just use them to spot potential moves. You can use them in various ways, but the best way to use Bollinger Bands, because people put way too much stock into them, saying, oh, we have to drop down out of the top of the Bollinger Bands. No, we don't have to. We can continue to be bullish, but I use them for your squeezes to spot a potential move and also to kind of spot our trading range that we're within. Shami, I've done scalping using the Bollingers. Yeah, absolutely. You can scalp with them, but be careful because we can ride the top or the bottom of one for a very long time. So make sure you use other indicators when doing so. Let's switch back over and let's do the GMMA, which is a beautiful indicator. Great for showing overbought and oversold conditions. Here it is right here. All you have to do is type in GMMA. There's a number of one on there, but I suggest you use the stock one, which is the Guppy multiple moving average. You can type in either one, Guppy multiple moving average, GMMA. And what the hell is the GMMA, you ask? Well, let me show you. Let's go over to the daily here. The Guppy multiple moving average, pretty self-explanatory, right? So it's a number of moving averages, exponential moving averages, meaning it is weighted slightly. And you can see the difference. I'm pointing on my screen here like a dummy. Let me use the mouse. EMA1 is set at 3, 5, 8. So it uses 3 periods back to plot the moving average. There is our first EMA. Here is our second one, which is 5, 8, 10, 12, 15. Then we get into the slower moving ones, which is 30. The only difference on this one that I use based on the ones you guys will find is I just colored them. I colored them, the slowest moving EMAs, bright red, and then made a gradient scale to my fastest moving ones, bright green. You can do the same, just take some time. And what does this little indicator do? Well, it can do a number of things. You can watch for crossovers. such as here, as we're seeing. This would be considered a bullish crossover as right around here. Let's reverse this to right there. So as the EMAs begin to come closer to our slower moving EMAs, we want to begin to look at other oscillators and volume indicators for a long position. Let's say everything lined up. We take our long position. We can clearly see that the EMAs cross over, and boom, our long position worked out great. Now, again, you want to confirm things like that through volume analysis, which we'll get into next, and our oscillators. But another good, useful thing for it is, let's go back to a major sell-off and see what happens right around there. So remember, the Guppy is not leading. It is reactionary to the price. It is moving averages. So as the price moves, it plots it with it. So it's typically not going to give you any early signals, but you can begin to gauge momentum. And you can also spot ranging and trending markets. We are ranging here. They are bunched together, meaning nothing is happening. But as you can see, it begin to push away from the current price range. You can see this little waterfall that it created. And you can also gauge the strength of a sell-off based on the gap between the fastest moving EMAs and the slower moving EMAs. As you can see here, it found a bottom. It began to level out the faster moving ones, and we paid attention. At this point, we're going to play it forward as if this were real time. We crossed again, and you know what? It did it too fast. Right here. So let's slow the speed down a little bit on this replay tool. As this, you know what? We're going to actually go to this 15-minute here because it showed us a much better example of oversold conditions right here. So we had this gigantic sell-off happen. Market's freaking out, right? People are capitulating, talking about we are never coming back. We're going to $1,000, this, and that. They're selling off. Well, what does a seasoned trader as myself do? I go and throw on the GMMA Guppy and take a look at our oversold conditions. You can see we are so far away from the moving averages there, especially on that candle. I see a candle like that. That is a long position for me. I am looking to long that candle based off of that. It is a very risky way to long it because you can continue to fall, but generally what goes down must come up, and what goes up must come down, right? So as the theory is behind the Guppy is the further we get away from the Guppy, the more likely we are to rally back and have a very good position. So let's say we took a long position based off of how far this is away from the Guppy. And what I mean, again, is we wicked all the way down here. Let's say you're watching this in real time and you chose anywhere in there to long it based on the fact that we are further away from the moving averages. What's going to happen? We're playing, boom. Actually, I did end up longing this. I think this is the one I tweeted about, right? And everyone was like, be careful, trend is your friend. Yeah, thanks, guys. I know what I'm doing, though. But based off of that, that is a very, very dramatic example of what happens when we get out of oversold conditions. It doesn't always happen like that, but generally as we get far away from the Guppy, entering into long positions or short positions, catching falling knives, this is the tool I use to do it. It's pretty simple, guys. Exponential moving averages. As we get away from those, I set long positions. This is typically a day trader tool, but you can use it for your long-term time frames. Take a look at the daily here. We are in oversold conditions. If you caught any of those, congratulations. The Guppy gave you pretty good positioning. Now we can range down here for quite a while on the daily. Let's say we just flat out, right? These moving averages will catch up and we will start to bunch together like up here. So be careful on it. But when we get into oversold conditions, especially on smaller time frames, or overbought conditions, it needs to reverse at some point. That's the Guppy multiple moving average. Any questions on that beautiful little tool? How come you don't use CCI? Who says I don't, but we're just covering those right now. Do you use the GMMA and the stochastic together? Yes, I use all my indicators together. Remember, TA is a puzzle, right? Puzzle pieces. Take all the puzzle pieces together until you have a clear picture of what it is. Awesome stuff about the Guppy here. Yes, It is one to be careful on, though. And yeah, any more questions on the Guppy? On the way down, we had a few candles wicked down the same way. Yes, of course. I'm not sure what you mean, Lucas. But yeah. Any other questions? Next, we will do the OBV and the CMF. We are at the time limit here. Yes, Shammy, you can use it for confirmation, most definitely. We are out of time here, but I'm going to cover the CMF and the OBV anyway. Who cares? You guys can review it if you have to go anyway. Let's roll. All right, guys, here is my favorite indicators. A lot of you know I am big on volume trading. Absolutely. We're going to roll through these real fast. But again, if you want to understand how these two indicators work, please go over to my trading view, take a look. Both links are here. Let's post those links right now in the chat for you guys. Here's the OBV plus CMF divergences. Guess what, guys? These spotted the top of Bitcoin also perfectly. I explained how I did it in there, how it did it for me. Chalk and money flow, CMF, post both of these in here. You guys better learn a lot off of these. You will never buy the top again based off of these indicators if you do it right. There they are. Study them later so I can take you through these. So what is the CMF and the OBV? They are volume indicators. Now you have your traditional volume. They are time-based volume indicators. You have your traditional volume indicator right here, which is generally garbage to me. What does this tell me? Not much. You have the moving average here. If you are going to use this, here is a tip. I think I showed Josh this a long time ago. Hopefully he's gotten away from this. I think he has because I see him use the CMF a lot. Go to scale and click pin to left. Look what happens. It expands the volume indicator for you. Now, it does go way up into the price, but what you can see here is the moving average, which is much more useful than these candles. Speaking of, these candles, people use them for finding overbought and oversold conditions, right? Well, the Guppy does the same thing. This gigantic red candle right here would have told you we are so oversold, go long there. And not so much. We got more oversold based on this Guppy here. I generally disable this volume indicator. I don't like it. It is useless for oversold and overbought conditions. There's better ways to find it, such as the Guppy. There's better ways to do volume time analysis, which is the CMF and the OBV. So I turn this off. Do what you want. But if you are going to use it, try this little tip. Go into your settings, go to scale, pin to left, and it will expand it for you, and you can get a better view of it. Now, here we go. The CMF, they move. CMF and OBV generally have the same inputs, but sometimes will give you two different stories. Now, there is no surefire way to see which one is telling the truth if you get different readings on them. However, use both of them equally. I do not throw more weight to the other, but I use the CMF as a way to measure pressure on volume. And the settings I have here, I leave the inputs the same, which is 20. I put my style to area with breaks because it will come like this. That doesn't look too great, right? It's kind of hard to read, especially if you're measuring pressure. So I go to area with breaks. I turn mine bright green so I can see it visibly. CMF here is really good for pressure. As you can see, we have a bullish divergence. Again, learn your divergences, guys. If you take away anything from all this stuff, learn to spot divergences. Otherwise, these indicators are useless. No, okay, not useless, but for instance, Stochastic and RSI, they're going to tell you oversold and overbought conditions, but there's so much more to them, as I've explained. But as we can see here on the CMF and on the other indicators, the daily is divergent in so many different ways. This is why I expect a pop-up, guys. Stochastic, RSI, momentum indicator, CMF, and now OBV are all divergent. They're slowly working their way, and these bull divs have to play. What is divergence again? For those of you guys that missed it or are just not quite paying attention, of divergence is when the price is going one way and your oscillators or your volume indicators or any indicators are going a different way, showing different signals. Those are how you predict the markets the best you can, because technical analysis is really not predictive. But why do I like volume so much? Because volume precedes price, and it's as close to predictive as you could possibly get. I need to check to make sure you guys can see my screen. Yep, sure can. Gene, you already asked me about CCI. Who says I don't, but we're not covering it here. I use a lot of different indicators, guys, to get the picture I need. We are covering the indicators I think you guys will find the most useful and be able to identify basic trading patterns with. So far, I've showed you indicators that could have spotted the top and saved you tens of thousands of dollars. You know, we can do more advanced training classes at another time. You know, I use a number of techniques. I use Elliott waves. I use volume analysis that takes me hours to do when I'm studying an asset. We are studying indicators today, 101. Back to the CMF. CMF, you have your median line here, and you have, it doesn't work like the stochastic and the RSI where you have oversold and overbought conditions. Theoretically, this could go on forever, the CMF can. And if we go back to our bull market, which is here, you can see that it can spike up into really high extreme ranges, and it's a great way to measure pressure. For a long time, we were declining here on the CMF, but now we showed some very major sell-off pressure, and it was looking really scary, but now we're showing some bull divs. Same with the OBV. Let's drop down to the 4-hour. I won't show you guys how these two indicators spotted the top in Bitcoin. Reason being is those links I put in the chat. Geez, cats, stop. The links I put in the chat explain that on my trading view on how they spotted the top, how we saw declining volume, and how we were able to spot that the market was slowing down and that we should have exited out of all of our Bitcoin. But back to this. We are at the 4-hour now. We are showing some confluence on the OBV, on the CMF. Oh, okay. I'm sorry. I forgot to explain what the CMF is. I got into, there's no such thing as overbought and oversold conditions. I use it to identify buy and sell pressure. For instance, here, we could see declining sell pressure. Market didn't really move. Let's find a good example of where we were seeing, okay, right here. So here's a strange example, right? We had built up quite a bit of pressure on the CMF here. Market was making really good. It was confluent. It started to drop down to this median line as we corrected. That's normal. But as price action started to rise again and made a higher high, our CMF was rising, but not quite to the levels that we were seeing prior to that. We can see here, this is divergent. That was not looking great. And what ended up ultimately happening, we ended up dropping our bottom out and falling into a free fall. Same with the OBV here. What happened is we ended up topping out equally here. If we have equal highs on the OBV, then the price better be equal also. But price made higher high, meaning that eventually this was going to drop out unless OBV broke that high there. There was a trend there. Now, the OBV, let's switch over to that now that we've covered the CMF on buy and sell pressure and how it can spot divergences and tops like that. Let's flip over to the OBV. OBV is similar. You can change your settings around if you'd like. You can do the area with breaks if you'd like, but I keep it online. And give me 1 second, guys. Okay, sorry about that. Cats were getting ready to fight. I had to split them up. Sorry that my cats interrupted all this. I have 2 cats adopted since they were little babies, and I love them to death, but they're not going to fight while I'm doing this because it's really loud. Anyway, long story short, so the OBV is another way to measure volume. We won't get into the inputs of these, but I do keep mine on traditional. There is better versions of the OBV out there in the indicators. how you find the CMF and the OBV. Go into your search bar there, on balance volume. That's the built-in one. There is a number of OBV variants that people have created. Play around with them. We even see a shock and oscillator applied to the OBV. Maybe I'll check that out later. Never heard of that one. That sounds right up my alley. Here's the shock and money flow, and then there's variants of that. For now, we're just showing you the stock ones that come on TradingView because not all of you have a Pro or a Pro Plus account, but these ones should all be included. I didn't want to include indicators that require you guys to pay more because not a lot of guys have that. But the OBV is another way to measure your volume levels. You see we have our median line here. Let's go back to settings and put this at 0. But there you go. You can see sell pressure has dropped down further. It's based on the close of a security based to prior action. Again, we're not going to get into that, but the way we use the OBV, spot divergences. Let's go back to that top, actually. I changed my mind. Great example here. So where is this one I want to get into? Trying to find the specific example where everybody is long. Let's throw on the Ichimoku because I promised I'd cover that. And we're going to talk about that also. And 1 second again. Okay. So let's go back to this daily here and spot some divergences on, maybe that was showing Bitfinex. Okay, here we go. Here's our good example. So clear back here. For some damn reason, everybody was thinking that the correction was over. I guess you could say because we had created, off this wick, a higher low. But bear markets can still do that, clearly. Let me make sure I'm still screen sharing. Yep, we are good. I just saw a comment, just realized spotting divergences is a key ingredient to trading successfully. It is a key. It is one of the keys. Boss, when you see divergence with CMF, does it matter if it's below or above the middle? It does not. Really, it just, that's a way to measure pressure also. But yeah. Ezra, no TD or Ichimoku. Yeah, we're going to get into the Ichimoku, probably not the TD today, even though I promised. Damn. You know what I can do? Because the TD was going to take about half hour to 45 minutes itself. I will do a TD class on there, and everybody will view it. Yeah, because that's going to take another 45 minutes or so on top of that. But we'll get into the Ichimoku, and let me explain this divergence real quick. So the entire market here, right? The entire market here was bullish. In this Ichimoku, which we'll get into next, the Kumo is a no trade zone for me because that's market uncertainty, and it was trying to find support and resistance from these rapid drops, and it creates a thick cloud. Again, this is when we get into the Kumo, this is sell pressure. This is not typically something you want to enter into a trade into. You can see we've been rejected inside the daily Kumo multiple times. But what I want to talk about is this top right here. Why I believed the bear market was not over and why I believed everybody was about to get liquidated, and they did. If we take a look here at the OBV, we can see that pressure was pretty high here, but lower over here when we were inside of the Kumo. Now, when we enter into a resistance zone, which that is what this is on the Kumo, that red cloud, I better see volume really spike up. You can see the market was buying. The CMF was showing a lot of buy pressure, but overall buy volume had dropped quite a bit. And so that is what we see. That's a perfect bull or bear divergence. Volume is lower, but price is higher, especially in a resistance zone. That is a place you do not want to go long in. You want to go short, and it's going to reject. You can use the OBV and the CMF to spot a lot of divergences like that. let me make sure there's no questions on the OBV and the CMF, and then we're going to go over to the Ichimoku cloud. So far, no questions. Looks like we are good. Let's cover the Ichi. All right, guys. We are 1 hour, 40 minutes into this, so we'll cover the Ichi for a little bit, and then we are going to have to end it, and I hope you guys feel you got your money's worth. All of these indicators I've showed you have been very key in my trading strategy. Obviously, I use more analysis techniques and more indicators than I'm showing here, but these are ones I find very key, and I wanted to share with you guys, and I get a lot of questions about. And, you know, again, these indicators I showed you today, they all spotted the top in crypto, and that was a huge issue. A lot of people bought the top, and you would have been able to spot it and exit out and, you know, be very rich had you had this type of knowledge beforehand. So I hope you guys do appreciate it. But let's get down into the Ichimoku cloud. So we have several components on the Ichimoku. We have the Kumo, which is this cloud right here. We have the baseline and the conversion line. The baseline is pink. The conversion line is orange. Now, stock settings are 926, 50, 120 or something like that. I use 20, 60, 120, 30. The reason why I use these settings is because those are the smoothest settings I have found for crypto. Crypto is a very volatile asset, and using such small settings, 926, will give you a lot of false signals, a lot of false TK crosses. What's a TK cross? We're about to show you. But those are the settings I use. I use those because I find those the best and most steady. There is a lot of traders that use different variants of that, and that's fine. You can still find signals on that, but this is my settings. That's what I use. So let's talk about this. The conversion line is this 20 setting right here. This is our fastest moving line. Picture the Ichimoku cloud as a series of moving averages that are plotted, okay? The moving averages plot this Kumo here. It is also an average between the baseline and the conversion line. We'll get into that and how, you know, how it forms itself. But the conversion line is your faster moving line. What we're looking at here, that's about as bearish as it gets to Ichimoku. Now, it is a lagging indicator, so it does not always catch up. But let's flip down to the hourly here. As you know your components, by the way, I have turned my conversion line and my baseline to pink. Typically, they are green and red, but I turned them to orange and pink because I want to be able to see them, and there's already a lot of green and red on charts and on indicators I use. So if we take a look here at our conversion line and our baseline, for instance, on this hourly here, this conversion acted as support, and the baseline is now acting as resistance. Typically, in a bull market, let's flip over to the bull market, we want to see our fastest moving line, which is our conversion line, right below the price, the baseline below that, and the Kumo Senko Span A, which is the green line there, and then the Senko Span B, which is that red line at the very bottom. That is the ideal setup for the Ichimoku. Keep in mind, there is another component of this called the lagging span, and all the lagging span does is copy price and the closes of that and displace its 30 candles back. That's what this 30 setting is here. It'll put the lagging span 30 back, and oh my gosh. All right. Sorry, guys. I thought I had an important message, but it was from someone in the Discord group that was asking about something. I disable my lagging span because I generally don't find a lot of signals off of it, and I'm just fine without it. And I already have a lot of clutter on my charts as is. But in the ultimate bearish scenario, you're going to have your fastest moving line at the bottom, baseline second to the bottom, Senko Span A, which is your green line there, and your red one there. In reverse, in a bull market, just like so, as you can see. Now, how do you use these? What's the point of them? Well, when we get things like let's find a really good example of a TK cross in the last bull. So we have these little corrective waves, right, with Elliott's. Let's find a good one that was able to spot. Okay, right here. So this corrective wave was over, right? We began to range, we broke out, created a little flag, dropped back down. If we take a look very closely here, we can see the conversion line during this corrective wave, which is the faster moving line, our orange line. Let me expand this for you guys. Was below our baseline. That's pretty normal. But as the corrective wave started, we had a TK cross there. And that is when the Tenkan-san crosses, we're just going to use English here. That is when the conversion line crosses the baseline. This is a Japanese trading style and indicator, so a lot of it's in Japanese. I'm trying to break it down into English for you guys. But that is a bearish TK cross. When that happens, typically price is going to drop. Now, you do see it react after sometimes because it is moving averages. But generally, when you get something like this, like a bullish TK cross on the daily, that's your go-to signal to go long. And you can see what happened from there. That corrective wave was over. You can see the conversion line acted as support. So can the baseline. Let's say that you had placed a buy order here and it wicked off of it. You timed it perfectly. You would place your stop loss here under the baseline in a bull market and vice versa in a bear market. So your conversion line based on the fast forward, based on the placement of them as of the chart, can be used for a number of ways. Resistance, support, depending on their positioning. Also stop losses. Clearly, you don't want to use this as a stop loss right now. That's pretty high. But let's go down to some lower time frames to show you guys some examples. We need a nice bullish positioning so that way I can show you guys a good example. Okay, here we go. So here was a reactionary TK cross. If we zoom right in here, this was a great, by the way, I'm on the 4-hour. I find the best signals off of the 4-hour Ichimoku. And here's why. The conversion line, which is our faster moving line, got out of this bearish position. The price action ended up closing above the baseline. Baseline is acting as support this entire time. Conversion line crossed. Yes, we were in the Kumo, but that TK cross right there is a go-to long position for me. So say we longed at this right here. Let's back it up as if we were watching this in real time. So baseline is acting as support, conversion line crossed. It's Nick's go-to TK cross on the 4-hour. I love that. We set our long positions. We set our stop losses below the baseline. We may have gotten stopped out there. Bad example. We enter back in. Everything's looking good. Oscillators are looking good. Clearly, we'd use our oscillators in our volume analysis that I just showed you guys. We cross above the conversion line. That is a good sign. Our stop loss, we re-enter back into the trade, place our stop loss again below the baseline now that we've broken that support or that resistance. And watch what happens. This predicted it clear over here. We start to trend up and bam, we made ourselves a whole ton of money. I typically would have placed my take profit right around there on the break of the Kumo because these do act as support and resistance. You would have missed some profit on there, but again, I would have been using volume and things like that. That right there would have confirmed it for me, that reversal candle right there. And, I'm assuming here, if memory serves correctly, we get a correction probably back down to this conversion line here, pretty damn close to it. Yep, wicked below that, broke below that. So the next stop we're looking for is this baseline down here. We were ranging in between it. Let's see if the baseline ever comes up and acts as support. A lot of spike ups there. It started to hold as support there. So, maybe we would have looked based on some other indicators. OBV was spiked up pretty high. But yeah, any questions on the Ichimoku? I am beginning not to, my throat is really dry from all this talking. Let's see. If I had to choose an indicator, cloud or CMF, oh man, don't make me do that. Yeah, do not make me do that. Sorry, man. I can't choose one because I like to use all the data in front of me. You shouldn't have to choose. You should be able to use all of them. What if two different time frames give two different pictures? For example, in one, we are above the Kumo cloud. In another, we are below it. Which one do we go for? The higher time frames are the best signals. So if you get a TK cross on your higher time frames, those are what you want to rely on the most. However, drop down to your lower time frames to look at your entry. You can really find good entries on your lower Kumos and your lower conversion lines and baselines. Whew, man, I feel out of breath, guys. Like I just did a workout. What'd you guys think? Feedback. Give me feedback on it. Did you guys learn some things? You guys gonna go out of here trained traders now based on indicator trading 101? Were you guys able to pick up things and expand your knowledge and learn to become a better and safer trader? Again, I will be doing price action seminar on. Oops, dropped the microphone. Gene, that was the only reason you signed up for it? The TD sequential? Again, like I said, Gene, I'm going to do a TD sequential. I'm going to do a TD sequential, and you guys will get that. But Tone Vase, by the way, charges 0.1 Bitcoin for his TD sequential class. I'm giving this to you guys all for 30 bucks. But yeah, how about this, Gene? If you go over to my trading view, there is the basic TD sequential. Yes, it is available for everybody. But what I'm going to do is I'm going to put a video out for you guys on the TD sequential. Again, it's 45 minutes to an hour to explain the TD sequential completely. And I am just out of breath on this. I'm sorry, but I will put out a video here in the next few days on that. So that way you feel you got your $30 worth on that. Okay. But yeah, you will definitely get that. Just be patient on it, Gene. But there is a intro to the TD sequential on my trading view available for free, but I promise I'll do a video also. How many puzzle pieces do you look at total? Brian asked. As many as possible, as many as it takes to get the whole picture. Also, yes, I will be doing a price action strategy seminar on, it looks like Thursday. It'll be part 2 of number 1 that I gave. Anybody that signs up there will get part 1 also, which is an intro to price action trading, what it means, how to find support and resistance levels. Holding my microphone here for those of you guys that are wondering. And we'll be teaching that Thursday. But I hope this indicator lesson was good, and I hope you guys walk away a little bit safer traders and are able to trade correctly and never buy the top again. Just based off of that, though, you should be able to Gene, you only signed up for the TD sequential as advertised. All right, man, look, I've told you like 20 times I will do the TD sequential video in a couple days. I will refund your money, and you will not get that TD sequential video. Good riddance. Everybody else was very appreciative of it. Like I said, most people charge hundreds of dollars. I have approached this question 20 times now. Frankly, kind of sick of it. I said I would do the TD sequential video in a few days. You will get refunded, okay? Message me for your refund. Thanks a lot. Everybody else, appreciate you guys. I hope you did walk away with all of this and you were able to absorb it. Feel free to review this whenever. If you did not like the class, feel free to tweet that out. I will look at that, Gene. Also, everybody else, if you did appreciate the class, if you tweeted out, I will show appreciation and retweet it as long as it's an appropriate tweet. Sometimes we get some inappropriate tweets, but I appreciate all you guys. Any feedback is good feedback. Gene, I understand you are mad about the TD sequential, but look, this was supposed to be an hour-and-a-half class. We are now at 2 hours. I am out of breath. I would like to take a break. So yeah, if you guys do have criticism, feel free to send me a DM. Always looking to improve it. We just did not get to the TD sequential here, mainly because of the blacked out screen for a little while. But I do appreciate all of you, and hopefully you guys took away some things. If you guys have questions about any of these indicators, send me a message on Discord or TradingView. Or Telegram. That is best. If you send me a message on Twitter, that's cool too. But I spot them better in Discord and Telegram. But make sure you put that you took the indicator class and I have a question about this. feel free to answer it. You guys are really getting a steal at that price. You know, I typically charge by the hour for consulting, but I want you guys to. Gene, what the hell is your problem, man? You're still going on in the chat. Like, seriously, I told you I would refund you because you didn't get the TD sequential. If you didn't walk away with more knowledge than you had at the beginning of this class, I don't know what to tell you, but you're going to get refunded and you're not getting the TD sequential video just like everybody else. I'm sorry, man, but honestly, like, geez, do you really have to go on? That's like 20 messages on the TD sequential. I am sorry I did not get to it. Please accept my apology and move on. Good grief. I'm... Anyway, guys, I do take criticism. Don't be afraid to criticize me. If I messed up somewhere, let me know. But don't go on and on about it. So if you do feel like I could have improved somewhere, feel free to send me a DM, tweet, whatever. I'll improve it. I hope you guys walk away more educated traders. And again, any questions on these indicators, send me a DM, and I will get to them when I can. Try to give me a day off, though. Let me get to the messages tomorrow. I've been answering messages all day, but I appreciate you guys a lot, and thanks for coming, guys. Talk to you guys later.